Hello everyone, how you doing? Welcome to the portfolio. My name is Kaseem. Welcome to today's dividend investing update. The name has officially changed. The name has officially changed to dividend and growth investing because the landscape has changed. Things has changed in the economy, and we basically, since the beginning of the year, since the beginning of this pandemic that we are going through, the adoption of technology, the adoption of growth has changed significantly, that I had to reconsider including those into the portfolio, and I'm gonna go over that in just one bit right here. I added some Ark Invest ETF. I added that into the portfolio. I'm gonna look over that in just a second. We are going to go over the S&P 500, the performance of the S&P for the week. We are going to look over that, and like I said, we are going to look at the Ark Invest portfolio here. We are going to go over some of their biggest holdings, why I decided to add them, who they are, who's the leader, and all that stuff. We're going to go into all that, and of course we're going to go into a little bit of news as well. Those of you that are interested in looking at the portfolio, if you want to take a look at my portfolio, click in the link below and look at this. Click on this link. You can click on this link. It will show you how my portfolio has performed and all the stock that is in the portfolio. You can actually check it out by clicking on this link. This is updated every single time I post a video. And for those that are interested in joining M1 and doing, investing, doing something like I'm doing, you can click on this link. This is the this is the referral link. By using this referral, you'll be supporting my channel. I appreciate you, and let's get back into the video. But looking at the portfolio here, as always, I like to just generally go over how the portfolio has been doing every week. So this week we really did not get paid much this week. If I go to 1 week here, the portfolio generated $1.69, and we lost $160 in market value, which was 0.57%. And if we go and look at 5 days for the S&P, 5 days for the S&P here, we have lost, let's see, we're down 8.5%. So I like to compare my portfolio to the S&P because S&P is a list of 500 of the top 500 companies in the United States. That's what this index compares to. And basically, I'm trying to create my own index with this style of investing. And as you can see, if I look at the S&P, we were down 0.8. Let's check again. We're down 0.85%, and the portfolio here is down just a little bit off of it. So the portfolio is doing great. So what I've decided to add to the portfolio is the Ark H here. We're gonna get into that in just 1 second. I want to go over the income for the week, and I like to look at these three: 1 day, 1 week, and 1 month here. And so far for the month, from September 24th to October 24th here, the portfolio has generated $27 in income. So the portfolio is doing exactly what it needs to do, and it's working for me tremendously. Pop over to the activity section. We look at the dividend. This week, the week of October 19th to October 23rd, 2020. This is the companies that they've paid. Dollar General, Intuit. Intuit is the company that is in charge of TurboTax. TurboTax is one of their products. Dollar General, that's the dollar store. Cisco System, that's the IT company, and then we have Simon Properties, that's the mall owning company. And if we go and look at trading activity as well, we made 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades all throughout the week, and most of it has just been I've been buying Apple, Neo, Space, Tesla. You guys know I have a series on Tesla that I'm buying $20 of Tesla every single day. I'm trying to dollar cost average into Tesla. And I have a video that is gonna come out soon, talking about each of these companies, why I added them to the portfolio, what my thinking process for each of them are, why I added them to the portfolio. We are going to look over that as well. Okay, so the biggest thing that's happened to the portfolio this week is by trying to focus on some growth companies, companies that their business are growing tremendously, and companies that I believe within the next 10-20 years they are going to grow, because we are getting into brand new industry with this pandemic, because we've moved up in the adoption of technology by 10 years in the space of 6 months. That's my personal belief, and basically what I've decided to do is to go and add Ark Invest funds, add that into the portfolio, and I'm literally just starting this fund now. I just literally started it yesterday. My first deposit will be $25, and as you guys know, I'm a I'm a sucker for dollar cost averaging. The name of the game is dollar cost averaging. You never know when to buy a stock for the long term, and you never know when to sell a stock for the long term. But to counteract a lack of knowledge or on this front, it's better to slowly get into the stock over time. So I've decided to add all the Ark Invest funds, add them into the portfolio, and my initial deposits will be $25, and it would literally spread the money around $6 here, $3 here, $3 here, $3 here, and that's how I'm going to dollar cost average into the portfolio. The reason why I do this is because this has worked for me. It has worked for me. It has worked for the portfolio here. As you can see on the year, if I click on year right here, the portfolio from May to October, the portfolio has grown by 15%. I think the S&P year to date, if I even look from May here, since we're counting that data from May, and then I look right here, the S&P has grown by 16%. So the S&P is beating me right now by 0.1%. But for me, I'm happy with this. Portfolio has grown by 15%. My goal with this portfolio is to get it up to $1 million, because I've just set $1 million challenge for myself. So I'm gonna do whatever I have to do in order for me to grow this to $1 million as soon as possible. And basically what I've decided to do is to put like $200 a week back into the market, because I believe the uncertainty is starting to phase out a little bit. Even the market basically dropped here during the uncertain times with the second stimulus bill, the election. I mean, we're still experiencing those, but the market quickly bounced right back, right, the market bounced right back here, and again 10%, and now we are basically down from this high. We're down just 2%. So I'm gonna slowly start getting back into the market by putting $25 a day. I will update you guys next week on it. By depositing $25 every single day into the general stock market. So the ways that I'm gonna operate this now is, if you guys see here, it's $50 waiting to come in. That's $50 is waiting to come in. $51 basically waiting to come in, and I'll keep on buying my $20 a day into Tesla. I will just leave this as just general money that's coming into the portfolio, and I'll keep on buying Tesla, NIO, all the companies that I'm bullish about. So the general amount of money that's coming into the portfolio will be $25 a day. Will be coming into the portfolio, into the general portfolio. So the money will get invested in any one of these companies. Most likely it will be Ark Invest funds in this section here. So the money will come in and be invested, and then I have another $20 that comes in, and that gets invested straight into the energy and transportation sector here. And obviously that is going into Tesla and NIO and a lot of this workhorse space and Hyliion. I have a video coming up on this topic soon, so stay tuned. A lot of exciting things is happening. As you can see, this sector I've really grown it. It's grown by 100%. This used to be quite high before. It used to be like 200%, but Tesla has dropped recently. Tesla has dropped recently. In the past 5 days, it's dropped a lot. So for me, I find this to be very, very enticing to increase how much money I put into Tesla. This can be a really, really nice buying opportunity here, especially with a lot of the negative news that's coming out, that they have to recall a car. So that will be an interesting buy in the future. So the way that I'm looking at the portfolio here is, I have a segment of it which is dividend investing. Most of it is right in here: passive income, ETF, stock, and this one right here, Berkshire Hathaway. This one. So majority of the portfolio here, majority of it, at least like 85% of it is geared towards income, and 5% of it is geared towards growth. So I'm looking forward to sharing this with you guys every week, showing you the progress and showing you what is possible when it comes to this style of investing. So again, if you look at the general market, look at the S&P. The S&P hasn't really done much. Yet today, we're basically hovering around the 350, 340 level. But like I said, the last video, anytime the S&P drops below 300, I'm going to be aggressively putting money back into the portfolio. So I just thought, let me point that out to you guys. Let's check out Ark Invest now. So the company that I've been looking to invest in is this company. They're called Ark Invest, and they are focused. Their primary job is to focus on innovation, and they have a team of researchers, they basically go out and buy a bunch of companies, like 40 companies, and put them into one fund. That is what this is. Like, for example, if I look at this one right here, Ark Innovation ETF. If I go here and look at Ark Innovation ETF, this has been their performance for the past year. Let's look at the performance for the past year. This was during the coronavirus time. It was $60 at the top, and then it came down at the bottom here. It was $34. It was $34 here, and now the price is $104. So this is basically 3 to 4 times over the space of less than 6 months here. So this is something that I cannot ignore in my portfolio, because the companies that they have in the holdings, this is their top 10 holdings. We have Tesla here, Invitae, Square, Roku, CRISPR Therapeutics, Photolab. Basically, all these companies that are doing things in a different way, and they're innovating fast. So instead of going out and buying those individual companies and adding them to the portfolio, basically this is an actively managed funds. So they buy and sell stocks basically on a regular basis, which helps their performance overall. Okay, so by me adding the ETF into the portfolio, I'm going to be exposed to the performance, basically the performance growth here. So if we look at the past month, they basically dropped pretty significantly. It was high. It was at this point it was $104, and right now the price is at $99. So I'm obviously not getting it at this prices, which was like $38. I'm obviously not getting it at this prices, but who knows where the price will be, another year from now or 2 years from now. Look at if I click on the all time, look at where they used to be before. They used to be at $20, and slowly but surely, their funds start picking up, and they've just seen tremendous growth. They've seen tremendous growth this year. Even during the whole pandemic thing, their fund has actually grown quite a bit. Now you can say, hey, are you not buying this at a high price? Because obviously this is quite high. Are you not buying this at a high price? This is the reason why I prefer my primary way to that I love investing is dollar cost averaging. I set a set amount that I put into the portfolio every week, every month, every day. And I have different strategies for different amount that I add into the portfolio at different prices, right? So all this different portfolios, holdings, I'm managing them in different ways, right? So like the way that I'm doing with the Ark Invest section here, that is what I'm trying to tell you guys with me explaining this. Now, I'm definitely not getting this at the best price, because I could have jumped in when it was 60, I could have jumped in when it was 70. So I would love for it to come down some more, but then again, I don't know if it will come down for some more, because nobody knows. Nobody can accurately predict the stock market or the performance of any particular stock. Nobody on this planet can accurately predict it. So to hedge against my ignorance, right? To hedge against my ignorance, I am going to just keep on dollar cost averaging into the general ETFs, and who knows, maybe in the future, instead of their price being at $90 right now, who knows, maybe it's going to be at $350 in another year, So I'm going to keep an eye on the portfolio and keep updating you guys on it. So this portfolio manager is her name is Kathy Woods. I'm going to show you her in a second. The market cap of this particular fund is $5.9 billion. 5.9. Oh no, that's the median. Let's see the total market cap. Actually, let me check on Google here. They do not have it up. So the total asset on this it's 8.9 billion, $8.9 billion. Expense ratio is really high because this is high, but you're paying for the growth, and because it's an actively managed portfolio, so you know you do have to pay a higher price. Now, I could go in and buy the individual companies. I actually have some of them. I could go in and buy the individual companies, but I don't want to have to keep on keeping up with their complete holdings and selling and buying and selling and buying. I'd rather just have it the easy way, pay the fees that they pay the fees that they charge, and hopefully enjoy growth like this that is still to come in the future. I believe in what they're doing. Innovation has been ignored in the market for a long time. So I believe that in the future they are going to actually be one of the biggest fund companies in the world. So let me show you guys this really quickly here, right? Okay, so this is their platform, right? This is what they are. These are selling points, the selling area right here. So let me see here. Just give me 1 second. I'll be right back. This is their whole thesis, right? This is their whole spiel. They're saying that during 1781, that the steam engine was the big deal at the time, and then 1860, the internal combustion engine was the big deal. Telephone was the big deal here. Electricity was the big deal here. Airline was the big deal. Telecom was the big deal here. Microprocessing, which is chips and all that stuff, was a big deal during this dates. And mobile phone was the big deal during this days, 1970s. The internet 1990. And then the human genome sequencing was during this time. And now they believe this is the biggest space that innovation is coming through, and this could potentially be the biggest growth engine of the future. And they basically get each of these funds. They basically get each of these funds to focus on just that. Each of these funds are focused on all their innovation platforms. So they have their Ark Innovation ETF, FinTech, Genomics, and their industrial as well. So this section right here, all these different areas that they believe technology is making a big impact in, it's basically what I'm trying to capture with the portfolio here. And I do believe that over time, technology would help humanity, and the conversion of technology is actually quite high. And I'm going to show you guys an example of what I mean right now. Give me 1 second. I'll be right back. Yeah, I'm going to show you guys. This is Tesla's self-driving Beta at work right here. And as you can see, this as the car basically can recognize and see what's going on, all the cars that are moving. This is the Tesla right here. It can recognize what's going on. It can see everything basically. It can see all the other cars. As you can see up here, it can see all the other cars. It basically knows what's going on. And we can see this. Basically, you can consider this as robotics. Like the car is basically a robot that drives itself around. If you look up here, you can see they can recognize all the lanes. It recognize, like this car right here, it basically recognizes this car on this side. You can see the car here. You can see this car here, right here. You see it just passed it. This is going to change things. It's going to revolutionize things. Like, for example, in the future, you basically might not even need to buy a car, right? You can just maybe sign up for $100 a month of unlimited Uber rides with Tesla, or unlimited driving at a set unlimited price. Look at this. The car basically just stopped at the light, recognized that there's a car in front of it, and stopped, give it a lot of distance. At the same time, the car can see other cars in the back, in the side of it. You see this car right here. It saw it came through. As this car is pushing upwards, you can see it recognizes two cars right there. So basically, the car can see absolutely everything that's going on. And yeah, this is the height of technology, people. And I'm investing so my portfolio will benefit from the growth in technology. Look at that. All these cars are standing here. The Tesla basically recognizes and can see it. When you can see and know what's going on, and this car is just quite amazing. Let me also show you all the other innovative platform that are actually in the works right now. Video too long. I just want to urge you guys to consider looking at this website. I'm going to leave it in the description below. You can check out the website. And if you love what I do here, please take a second to give the video a like, subscribe to the channel, because this portfolio is an ongoing project, and of which I'm committed to sharing every single step of the way. Any new changes, any new addition or subtraction to the portfolio, I'll be sharing it with you, and you can watch it live to see what's going on. So yeah, like the video, share with other people that you think might be interested in this type of content. And yeah, I will see you guys on next week's portfolio update. And take care, guys, everyone. Take care, everyone, and have a good one. Bye.